Still on company financial results, Standard Bank's profits are up thanks to a decline in credit impairment charges. This means the bank had more creditworthy individuals and businesses rather than individuals or businesses with a lower credit rating. The bank attributes its growth to an uptick in client franchises and digital clients. Standard Bank has tightened its lending criteria, focusing on extending credit to businesses and governments rather than individuals, limiting its exposure to rising bad debt. Its client numbers have also grown by 5%, with growth recorded in both the South African and African regions. CEO Sim Tshabalala speaks to us now. Thank you so much for your time and patience, Sim. First of all, congratulations on another good set of results and attributions here, of course, being the expansion in your client base, but at the same time, the progress in the digital adaptation. Talk us through some of those attributing factors.
Yes, thank you very much indeed, Dumisang. Firstly, the group headline earnings of 22 billion rand are up 4%. Here's an important point to bear in mind. They are up 17%, however, if you take account of the local currencies in which they were generated. But because we have to translate the Nigerian naira, the kwanza, the shilling into rand, the 17% growth reduces to 4%. So that's the first big consideration. And that 17% illustrates to you this massive momentum that we are talking about in our operations. The second consideration is that the star of the show is SBSA. The South African operations, they were up 12%. Now, that's up 12% in an environment where GDP plus inflation is roughly 6%. So an incredible outcome in the South African operations. If you slice it slightly differently and you look at our products, you will see that insurance and asset management did very, very well, and they generated a return on equity of 15.5%. You will also see that the second fastest growing business after insurance and asset management was personal and private banking run by Funeka Manjani. They were up 12%. And then the big businesses, the big corporate and commercial businesses, what we call business and commercial, that was up 1%. The corporate and investment bank, which is essentially half the size of our group in terms of profits, they were down 1%. A large proportion of that is because of their operations outside South Africa. You are correct, and let me maybe stop by making this point, that it is something of a tale of two cities. Consumers are having a tough time because of high interest rate and high inflation, particularly in South Africa, whereas the corporates continued to borrow and they continued to invest, in particular in the energy sector, which gave rise to that growth in our corporate and sovereign lending book of 8%. Whereas when you compare that to our home loans business, that was up only 1%. I might just correct a proposition that you made earlier on, which I don't agree with, which was that we closed the taps. That is not true. We had more competitors entering home loans, which gave rise to a slowdown in the size and pace at which our home loans book was growing. Our vehicle and asset finance book grew at 7%, and then our credit cards at roughly 3%, and unsecured lending was down roughly 2 to 3%. So it's a question of competition and demand from customers as opposed to us closing taps.
And fierce competition in the banking industry in South Africa. I'm interested in finding out about the client base side of that coin, particularly when it comes to protecting South Africans. The fraud scenario has brought in a different dynamic where the banking industry is now solely responsible for issues that occurred even at Standard Bank just last month, where there were the SMSs that came out, and it led to a glitch that then resulted in the reflection of a banking statement on one's account that did not really reflect what the client knows they have within their kitty. Talk to us about how then the Standard Bank as a group is looking to buffer against that.
Yes, so a very good question, and I think there are two parts to it. The first one is the ferocity of the competition. You've got the traditional banks competing with one another, the big four and now the big five, with Capitec being the largest retail bank by numbers, according to the statistics. You've got new entrants. I think Time Bank, think Discovery, Bank Zero. And then you've got fintechs that are providing clients with solutions that are bespoke, whether it be payments, think Ikaka, and so forth. So you're right, the environment is fiercely competitive. What is also true is that as the environment gets more and more digitized, so do fraudsters and people trying to steal people's money. They run businesses, to be frank. They are well organized. They operate as syndicates. They have got data mining capabilities. They've got systems. And guess what? They are internationally active. They run like global businesses. So that's a fact. And all of us know that because we see that through our own banking and our own cell phone activity. However, the important thing to bear in mind, Dumisang, is that we spend hundreds of millions of rands. We've got hundreds of staff members. We've got very sophisticated systems that protect the bank and they protect our clients. From time to time, the fraudsters succeed, but most of the time we resist them and we block them. And I can quite confidently tell you that the incident you are referring to, yes, it did happen, but we refunded all our clients and our systems are now up and running and are as safe as ever, and our clients are protected in the process. That does not mean that fraudsters are not going to continue trying. We continue to advise our clients about the sorts of things that they should and should not do, like, for example, sharing your PIN, like, for example, not giving your information to a bank that will never ask for. We will never phone you up and ask you for your PIN, for example, and so forth. So it's a partnership between ourselves and our clients. We are heavily invested in protecting their interests, but it is important for clients as well to make sure that they protect themselves.
Lastly, let me ask about the near-term outlook as we are in the latter parts of the year 2024, and at least there's a bit of optimism in terms of an improved economic climate in the country.
Absolutely. I don't know which statistics one wants to look at. Think about the Bureau for Economic Research and what the consensus among economists are, which is that if the structural reforms are implemented by the authorities, we could have medium-term growth at above 2%. 2% on a GDP of $400 billion is a huge deal, and it's worth playing for. There is a lot more confidence, I think, pursuant to the elections, that our country is part of the billion people that have now been part of elections, and our elections stood out for their fairness, they stood out for their processes, they stood out for their sophistication. The Government of National Unity sounds like it will be continuing with the basic principles of the Constitution, protecting the rule of law, continuing with Operation Vulindlela and adding to it so that we increase the efficiency of the network industries, accelerate power generation, power distribution and power transmission, improve the movement of goods in and out of our ports, improve the telcos pursuant to the spectrum release, increase 5G in our country, improve the visa network for our country, make it easier for tourists to come in, make it easier for people that are coming to add value by way of their skills to our country, but also make it easier for our people to travel abroad. Improve the ease of doing business, and importantly, Tumisang, make it possible for us as South Africans to take advantage of the South African national competitive advantage in the context of trade with the world, and in particular through the Africa Continental Free Trade Area. And so yes, lots to be confident about, lots to be excited about, but it requires of us to execute against these plans.
Absolutely, and thank you as always for giving us your time.